Yeah, good afternoon, Tyler. Fed Governor Chris Waller saying inflation is alarmingly high, persistent, and has broadened. Some hawkish comments from the newest Fed governor. He says an increase in the funds rate will be warranted shortly after asset purchases end. They end in February, early March. It does open the way, from his opinion, for a March rate hike. The Omicron variant is a big uncertainty in the Fed outlook. Could go either way, more inflationary or more declines in demand. He still expects inflation to moderate next year, but he's closely watching inflation expectations. On the economy, he says it will continue to grow very strongly through the first half of 2022. And he's also optimistic about the employment outlook. Real quick, Tyler, I want you to show you what's happening to the March probabilities for a Fed rate hike. They have gone up. They're near about, call it 47% right now. And you can see May and June are a lock for that. Not a lock, but strongly anticipated for that first rate hike. Start to get into calls for a second rate hike in July and the third one by December. That's where we're at right now. It's a new development, this March idea that has sunk in, and certainly Waller's comments seem to be in line with that.
Yeah, well, it seems like a more aggressive stance. Let me ask you a hypothetical that is kind of maybe a little off point. What if the Fed on Wednesday had said, we're just going to stop buying bonds right now? The hell with taper. We're going to just stop. What would the market reaction have been? Is there an argument for having done that?
There is, Tyler, and I think the question that I asked of the chair was kind of in line with that, which is, hey, you're talking about inflation being such a big problem. You're continuing to buy bonds,
yes,
and you're going to buy them for the next several months. Why are you doing that? And he said, well, basically, we don't want the markets to freak out. That was the my paraphrase of the Fed Chair Powell's much longer and coded response. But that was the gist of what he said. And it's really to avoid a taper tantrum. He's still trying to make that happen. Now, there's a legitimate question, Tyler. What does the Fed want rates? What does the Fed want rates to do here? And it may be that it really wants rates to rise to tighten financial conditions to start to get a hold of the economy and inflation. But yields have gone nothing but straight down since the Fed started talking. They're actually lower today. And I think what's happening, Tyler, you led the show with this conversation, which is this battle in the markets between the weakness of Omicron and the Fed, which is going to be tightening. But it looks like the concern over Omicron is certainly dominating in the debate in the bond market right now.
I think that's what we're going to hear more about these next couple of hours, Steve, by the way, about Omicron and how central it is to the economic thesis. Steve, thanks very much.
Yeah.
Appreciate it. Have a great weekend.